Hey, good afternoon. This is Mike Goodwin with EverLogic. I'm going to be showing you around our software and give you an in-depth demo on how to, stock in a vehicle, sell that vehicle, and go through the operations department in terms of adding, parts and accessories to the sale. And then finally, I'll show you how it goes over to QuickBooks. So let's get started. How EverLogic is organized is basically by module and by operations. So everybody gets the Home tab. Some of the key features that people like to focus in on is the calendar and the document management system. And then we have quite an elaborate help system over here. One of my favorite features of the software is the quick search. It allows you to type in a VIN number, a part number, really anything, and it'll go across the entire system to try to locate that in the system. And then we have these other things called FlexViews. These are user-defined reports, essentially. Allows you to pick and choose columns. So I'll show you how that kind of works. And then we organize it by module. So in the sales operations module, we have a customer relationship management module, different features and functions that you can look up there. Then we have sales and financing. This is where you can desk deals and complete all the paperwork that's necessary to complete a sale. And then we have an inventory management. This is for your vehicle inventory. So basically anything with a VIN number. Then we have parts and service. So this is a point of sale as well as a parts inventory management system. Here's where you can order and receive parts. And then we have a service module, which allows you to do all of your repair orders. And then we have an office operations. This is where your back office people work. You have QuickBooks. So this is the transactions that we're going to send over to QuickBooks. We have some end-of-day and back office features. And then we have a series of reports organized basically by module or what your business function is. And then a system setup. This allows us to configure EverLogic to your dealership specifications. So we're going to try to make sure that the software is going to work exactly for you. So let's get started with stocking in and selling a vehicle. Okay, so let's say a new piece of inventory arrives at your lot. We can either do it as a purchase order or just stock it in as a piece. I'm going to show you how to put in a new piece of inventory. We have this inventory form. We're going to assign it a stock number. So let's say we're selling a Winnebago product. So let's say it's a WB, and I'm going to give it the last 5 of the VIN. Then we assign it to a location and give it a status. Most of our statuses are standard, but you can add in your own. So we have an in-stock vehicle. Let's say it's a new, and we'll say it's a Class A motorhome, a 2023 Winnebago Adventurer, and it's like the 35P floor plan. And then over here, we're going to put in the serial number. So in EverLogic, if you don't put in a valid serial number, it's going to tell us that it's not valid. If it's an automobile, it can actually do VIN explosion, so it's actually going to populate out most of this information for you. But in the RV industry, we don't have anything like that. So in the selling price here, we're going to establish what we're going to retail this for. So let's say I'm going to put it on my lot for $189,000, and I'm going to put in my purchase date. So let's say I bought it the 1st of May. This is going to trigger the days on lot. So all of our inventory is managed by aging. So that way you know how long that unit's been sitting in your lot. Then you're going to put in things like the color. So let's say it's, burgundy out exterior, burgundy gray, and then interior color, oak, mountain, and you can put a fuel type. In this case, it's a gas motor home. No odometer, is brand new, so just drove down. So let's say it's got 600 miles on it. And then you can put in your length, all the information that you're gonna wanna know. Over here, we're gonna put in an itemized charge. This is one of the values of EverLogic is actually be able to, stock in a piece and then be able to track all of the itemized charges for that stock item. That's one of the limitations of QuickBooks. You can't really track that kind of stuff. So if it runs through your service department or something like that, you're not going to be able to know exactly what you have into this vehicle. So let's say that the invoice came in from the manufacturer at $149.9, and we could put a vendor on it, Winnebago Industries, and we've stocked in the vehicle. So other features we have with EverLogic is we have a floor planning module. So if I did floor the unit, you can choose a floor plan company here, and then we can put in our beginning balance and put in starting balance on the first of the month, and it was 149,900, and we're going to add that balance in. So now that we've floored the unit, the other information, you're going to want to fill it in for tag and title, so that way you don't have to fill it in all the time. So if you have the information right now, when it comes in, just go ahead and put it in there. We have a pricing tab. This allows you to set up to 10 prices for a unit. So you can put in formulas. So if I wanted to say, hey, my floor plan amount is going to be the cost of the unit, which will be item 2 times 6%. So when I put in the cost here of 149,900, it's going to automatically calculate out my floor plan percentage that I want to charge. Place for putting pictures. Okay, so now what we're going to do is we're going to add an image and locate my pictures. I have some inventory pictures. So I'm going to upload this image and that image. It's going to go ahead and put them in here. So I'm going to rearrange this, put this one as my cover. So you can rearrange them and stuff. You can add as many images as you need. I just noticed when I went out here, it's actually a 35F. So you can quickly go back here and change that to a 35F. But you got some images. We got a place to put in a description and notes. So this is a really nice motorhome. But this is information that you can put in and it can transfer over to your website. So it's important to put in really good and clean descriptions. So let's save that. Let me show you how we can post this over to QuickBooks. So once you've stocked in the unit, you're going to want to make sure it's up in your financial system. So you would click into the office operations, click on, if you're the accounting person, click on list unposted stock. You can either use QuickBooks desktop or online with EverLogic. So now we're connecting into QuickBooks and we'll have a list of units that you can post over to QuickBooks. So I've just stocked this 35F in. So just pull it up. And it's going to basically create a bill that we can send over to QuickBooks for $149,000 and goes to our floor plan payable account. So I'm going to click save. It's going to post it, create the bill in QuickBooks for us, and it's going to roll off of our list to post. And so normally this list is going to be pretty clean because every time you receive an inventory, you're going to want to make sure it gets stocked in. Okay, so let's say that a young couple comes in, or a young couple with a family comes into your dealership and says, hey, we're looking for a motorhome. We want to take a vacation this summer, and we've rented before, but we're really committed. We're ready to purchase something. So if you get with your salesperson and they say, well, okay, we know we have in the lot. Let's go out and let's do an in-stock search. So these are what I was telling you about creating your own views of what you want to see. So if you wanted to create a list, you can actually just right-click on the any of these grids, and you can pick and choose what columns you want to see. And so we can see our selling price, we can see days on lot, maybe we want to add to this. We want the exterior colors, we want the trim package, vehicle type. So let's save that. And so now it's going to build me a brand new view. In EverLogic, you can actually name these things. So I could just call this my lot sheet or in stock list. Just give it a name, just go in stock. But you can provide advanced filters and make these things anything you want. In-stock list of inventory, or of units, I'll call it. I'm going to save that. So now I've got this list. I can come back to this at any time just by clicking in this list here and say, hey, I want to look at a lot sheet. My lot sheet looks a lot different than my in-stock list. These things are all saved, and so you can build yourself your own reports. So let's say that this customer is looking for a Class A motorhome. So we can just scroll down to that. We can filter everything to our Class A's, and let's say we located the one that they want to get a quote on because they've been out looking on the lot. They're really happy with it. So let's go ahead and desk a deal for this customer. So I pull up the unit. I have information about it. I can see there's no add-ons at this point. And I'm going to go ahead and use my tools menu to start a brand new quote. So in EverLogic, there's several ways of starting a quote. The way I like to do is sometimes locate the unit and then start the quote, but you can start it just by clicking on the new quote button up here. And I'm going to close some of these background windows so we can just focus in on what it is that we want to see. So we've got a quoting system. I'm going to put in the customer's name. I got my trusted buddy Rob over here. He's going to come in and try to buy his first motorhome. So LANZA, and put Rob in there, and his phone number 1212. We're going to try to look him up. So it didn't locate anybody, so let's go ahead and create a new customer for Rob. So Rob's got his customer record up here, and then we would put in his wife's name, Roberta, and we're going to try to see if she's in the system, and she's not, so we're going to add her as well as a new customer. And they have 3 children, so they need a pretty good sized motorhome. So we've got this structured here. If they had a trade, maybe they're trading in from a travel trailer or something, you can put a trade in here. So let's say it's a 2015, a Keystone, and they're trading out of an Outback. And then you can put as much information, but the really important things are the cash value. So what do you assess is the value of this unit for resale? I'm going to give it a value of $12,000. You'd look it up in NADA guides. But I'm going to give Rob an over allowance of $13,000. And then I'm going to save this. And so I'm going to go back to my deal. And if I'm writing this up, I'm going to click on the profit tab so I can see what kind of profitability I have in this current sale. And I've got quite a bit of room here. So the first thing Rob's going to be like, you're crazy. I am not going to spend $2,000 a month on this motorhome, but I would be willing to spend about $1,500 a month financing. So I can either discount it, require a down payment, or bump the trade allowance. So I'm going to do a mixture of both, because if I discount this $49,000 to get his payment range, you're going to see I'm upside down in this deal. So we're going to split that. I'm going to say, Rob, I'm going to give you a $20,000 discount, but I'm going to be requiring you to put some money into this unit. So I'm going to say, and for the banking, you're going to have to put about $16,000 in anyway. So let's say you're going to put $20,000 in, and now your payment is going to be just over $1,500. If you're not comfortable with that, you're going to have to bump up your down payment. So let's say we're going to get $25,000. So now I'm kind of in that realm. Over here, we're going to calculate sales taxes. Different states have different laws or different sales tax rates. So we have the ability to set those and collect those taxes. On the item price tab, we have the ability to sell additional product. So in this case, I'm just going to be charging a prep fee, and I'm going to sell a service contract on this unit. So $5,000 service contract. He's elected not to do gap or tire and wheel or anything like that. All the other information is mostly filling it out. Like if I had to put all the tag and title information in, then I would have been able to, it would have already pulled up in here and I wouldn't have to do anything. And if I had Rob's insurance information, I could have, could have been pulled into this quote for me, or I can fill it out here and it'll actually transfer over to his customer record. So let's save our changes. Let's look at our profitability. Pretty good size deal here, even after paying commission. So, we're feeling generous. Rob's negotiated us down. So we're $25,000 discount. He's going to put in $25,000. His payment is almost to $1,562. He's getting a service contract, so that's fantastic. We're going to print out a quote. So I'm going to do a quote with called the quote with write-up. I'll show you what the write-up tab does in a second. But this is basically going to show Rob's information. It's also going to put in the itemized charges of anything that we're selling, and then it's going to list out all the financials of the deal and what the balance is to be financed and how much he has to bring to closing, monthly payments. Second page shows us what he's purchasing. Right now we don't have any additional equipment or accessories, and then we have terms and conditions. These are user defined. So normally in the process of the sale, we're going to elevate this. Rob, we got to get him financed, so we're going to change this to a finance pending. We're going to go over to our view more menu and go to closing documents. And then I'm going to send this to app 1 so I can get secure financing. And once that financing comes back, after we've sent it to app 1, we can come in and print out title applications, any documents that are going to be necessary to close this sale. We can print them out here. But at this point, we're just waiting for finance approval. Once the financing is approved and we find out from app 1, we can pull that information back into EverLogic, but we can update this into a finance approved category. And then I would call Rob in for contracting. So we'd set up a date and time for that delivery. On EverLogic, you just click on the scheduled delivery. We're going to schedule this for Friday, which is the 12th, and we're going to do it at noon. So we set that all up. And now this goes on to our delivery calendar. It's a finance deal, and we can put in who it was financed with over there. So when Friday comes and we're in the business office, just before we're going to do the walkthrough, we're going to complete all the paperwork. So in that case, when Rob comes in, so let's go look at our dealership calendar. So we can see, oh yeah, we have a Friday appointment coming up for a delivery. In a real dealership, this calendar would be probably quite full. But here's Rob, and when he comes in, I can pull this up. I can see exactly what it is that he is purchasing and what time he's coming in and what unit he's purchasing. So we've got all of that information. So let's skip ahead to Friday, and we're going to bring Rob in for closing. So one of my favorite things with EverLogic is the most recently used list. So if I have, the last 20 items or so that I've worked on, I can just pull it up by going here as opposed to going through a search. But if you had to search for it, the other thing that people really like about EverLogic is our Salesboard. So in this case, I have a quote. Now this is going to be pretty full at a real dealership with a lot of quotes, but I can quickly locate, Rob's deal because he's on my Salesboard. So this is what a lot of customers have, like a whiteboard in the sales manager's office. This would be an electronic version of that. So let's pull it up. So as Rob came in, he said, oh, I need to get a washer and dryer because my 3 small children, they get in the mud sometimes and a lot of dirty clothes. So we got to handle that. So as part of the sales process, we're going to install a washer and dryer. So I'm going to write install washer dryer combo. We're going to sell it. We're going to install it for $250. And then we're going to add the parts. So if we had a washer and dryer in here, which I don't think I do, but I'm just going to put in a widget, and we're going to sell this for $1,500. So this is going to add to the sale. You can see that we've added $1,750 in additional charges to the sale, but I'm going to run this through my service department. So this is the write up tab. So I'm going to write this up, and it's going to generate a repair order. So the repair order type is going to be an internal, because what we're going to do is all of that product and installation is going to be part of the deal. It's going to be financed in. So in that case, I'm going to run it through my service department as an internal, but I'm going to collect $1,750 from the customer. So in this case, you can see that my cost on this is $1,568. If you look at the service items tab, we've got the washer dryer combo. We can put a technician on there, and we're going to complete the work as we go. So we've got $125 in labor. And then on the parts side, we've got the widget that we installed. We did it 30 above cost. I'm going to do this at cost. So I'm going to change that price down. So it's $1,099 for that washer dryer. And then I'm going to cash this out. So I'm going to choose my payment method of internal. And I'm going to save my changes. If everything's done, we're going to be able to cash this out, and it's going to update the deal and the unit. Click on cash out. And it's going to close this repair. And I'm going to show you what it did. So let's go back to the deal. And so if we look at the profit tab, you're going to see that add-on cost internally was $1,239. We've charged $1,750, so it made about $400 additional dollars on this sale. From that, ran it through my service department. Let's go look at the unit and show you how it updated the unit. So now you can see that this repair order has added to the additional value of the unit. And so our cost has changed, but our profitability is going to be increased. You can see it's a sale pending status right now. So once we've completed the walkthrough, we're probably going to do another RO for that, or you could have just did it as part of that other repair before I cashed it out. You could have included that in there. But let's go ahead and just do the walkthrough with the customer, show them everything, and then I'm going to make this finance approved. We're going to deliver the sale. So when I deliver the sale, you can assume that coach has rolled over the curb, and now it's just time to send it over to accounting. So the down payment I collected at time of sale. So let's take that in as a deposit. And so we're going to take a $25,000 check. And we're going to add that. We put the check number in here. And so we've taken that payment in. So now we've got $142,000 that's going to be owed. And we're going to wait for the bank, Ally Bank, to fund us. But we're going to do that in QuickBooks as opposed to waiting and leaving this deal in a semi-delivered status, because we want to get that inventory marked as sold. We want to know who it was sold to, and we want to bring that trade into stock. So I'm going to click on the profit accounting, and we're going to execute this step. What this step is basically a summary of your percentages of how much money you made. On the back profit side, we're going to say how much our cost was on that extended warranty. We're going to put in what our finance reserve or participation is. So let's say I'm going to be making $4,900 on that for finance participation. And then I'm going to pay commissions. So Krista is going to get her 20% commission. And if you can split this up to 6 different ways. So if you have a sales or a business manager that makes money on the back end stuff, you can pay them a commission here and set that up. So let's say they get a 10% commission, and you can create commission vouchers. So what the commission vouchers will show, each person what they get paid. And then we have the one for Krista. So you can print those out and give them to your salespeople. Then we're going to wash the deal. It's going to ask us if we want to review add-ons. If you say yes, it'll pop up and say, oh, is there any additional things that are open here? There's not. So I'm going to just go ahead and wash this now. And so it's telling me, hey, I had to put in a stock number for the trade. So let's put the trade into inventory. So it was a Keystone. It's a used travel trailer. And I'll use the last 5 of the VIN. And I'm going to say add the trade to inventory and then wash the sale. It prints you out a wash sheet, which is a recap of the entire sale. And you can take this, a lot of people just print it out and put it in the deal jacket. But with EverLogic, it's always going to be there. So if you ever need to come back to it, you don't have to print it out, you can just keep it. Or you can make it as a PDF and upload it as a final document into our document management system. Let me kind of show you that. So I'm going to save this as a PDF. I'm going to put it in that inventory folder, and I'm just going to put this as the Lanza deal, and I'm going to use the reference number as part of that. So we can save that. So we're not going to print it out, but what we do want to do is I want to upload and keep that with as a permanent record for this deal. So I can click on my document management system, click on add documents, browse to that location, put it on, and it will put this wash sheet up there. And so it's a picture of the completed sale. You can do this with all documents in EverLogic. And if you ever want to locate them, you can just go into document management, click on view documents. It'll give you a list of all documents for that deal. So another really cool feature of the system. So let's post this deal over to accounting. So we're going to go into accounting. We're going to link into QuickBooks. There should be a deal here. I'm going to use QuickBooks Online. Okay, so we have one deal to post over to QuickBooks. Pull it up. And now we're going to save this over. So this is an invoice that you would never give to a customer. It has costs and information like that. But it's going to affect your accounting system, where it's going to take the Class A motorhome, take it out of inventory. It's going to put your trade into inventory, and it's going to cost out everything. Sales taxes, everything else is going to be collected. So let's click Save. It's going to add Rob as a customer over in QuickBooks. and then it's going to create this receivable over there. And so now when we receive the check from Ally, we'll be able to receive it in on behalf of Rob's account and put that money into the bank. So that is pretty much the full sales process, how it works a little bit with the service department. What I'd like to show you next is, maybe a year from now, Rob comes in for service with his motorhome, how I'm going to, execute that service. So let's say he comes in and he has a warranty issue. Let's say that he had a leak with, one of the windows, and he's going to get that fixed. It's still under warranty. So when he comes into the dealership, we're going to click on parts and service. We're going to click on a new repair order, and then I'm going to add the customer. We're going to look him up. There he is. Put him onto the repair. Put his unit on here. Hey, we sold him a unit, so we're going to put on his unit there. We can see that the date of purchase is still within the warranty. So we're going to go ahead and execute a warranty repair. So first thing I'm going to do is just ask him what it is that he wants to get done. So Rob says, hey, I'm bringing this in. Just say what the problem is. So customer states leak in driver's side window. And so I'm going to write this up for the technician. And I'm going to change this to a warranty type because we know it's under warranty. And I'm going to build this back to Winnebago. Okay, so I've got a repair started. And while we're walking through with Rob, he's like, oh, you know what I really need on this thing is I need a couple of fantastic vents over top of my vents, because every time I'm driving down the road, I'd like to keep that open. I can't because it's going to, blow off the cheap little vent cover. So I'm going to put a couple of fantastic vents. So we're going to change this from a warranty to a multi-type repair. And so now we're going to add a new job, and it's going to be a retail job. And if I had a labor code, I'd use that, but I don't have one for this. So I'm just going to write it up. I'm going to say install fantastic vents. So we've got this going on. We're going to talk about this, the leak in the driver's side window. So it's a warranty job. I'm going to put in the claim number authorization from Winnebago in there. I'm going to add a tech to do the work. And if I was using labor codes, it would tell me how long it takes to do this, but it's going to be an hour and a half to repair this. And then on the part side for that job, I got a multi-part adhesive. And most parts people are going to know the part number. Adhesive to fix the window. I'm going to assign this to my warranty work. And you can even put in a job line that this belongs to if you want. It goes to job number 1. So that way when you print out your repair, everything's kind of organized. Let's say we're going to use the other portion of that. We're going to install the fantastic vents, so we got to look those up. And so we're going to sell 2 of those. And then we're going to use shop supplies for that stuff. So we've got, your shop supplies. We can override those or calculate those automatically. But we're going to assign this job to job number 2. And this, of course, is a retail job. So RW or I, so retail, internal, or warranty. Okay, so now we've got the structure of a job put together, and we're going to execute the job. So we're actually going to complete the job. The technician's going to complete the work. So as we're going here, so Mike Tech is going to be assigned 1. We're going to let Mike do all the work on this. Now you can assign multiple technicians to a single job line, but in this case it's just going to be 1 tech. And then install those vents, it's going to be half an hour a piece, so 1 total hour. I'm going to complete the work as I go, and I'm just going to solution, just say completed. So we complete that work. I've got my parts on there. Let's check the other job. That one needs to be completed as well. So we fix the leak. Completed. and water tested. And it passed. You want to put some information on here. The cause, you just say worn seal. You can save that information. So sometimes you're going to be printing these repair orders out. You have a customer copy. Kind of looks like this. So here's a repair. Who's the customer? What unit they're working on. In this case, we got several pages because it's a multi-type repair. So page 2 is the installing of the fantastic event. So this is going to be customer pay. Or here's a disclaimer. Here's the warranty portion of the bill. So the driver's side leak, driver's side winter, the customer gets a no charge bill. And then, this is a standard disclaimer. You can print that out and give that to the customer. So when the customer comes in to get their coach and all the work is completed, we're going to cash them out. So in this case, we're going to cash out the retail portion. Rob's going to give us an American Express. We're going to process the payment with our credit card payment processing, and then we're going to cash it out. And then we're going to close the retail section, and then we're going to close out the warranty section. So we would print, there's multiple copies I can print out, and you don't have to print these out. Then we're going to cash out the warranty section. And so the warranty company is going to pay us that $338, choose a warranty payment type, and cash that out. And then we're going to close that out. And so that's about as complicated as an RO can get, is a multi-type RO. Most people, if it's a retail customer pay, it's very simple. Internals are very simple. Warranties are very simple, but when you have to do them all, then there's several more steps involved. And so we're completely cashed out. So that is how you complete a warranty job. So some other features that you have in EverLogic is, and you might have saw this on the repair, but if you have to order parts for a job, you can actually add it to a new or existing PO. I'm going to show you the point of sale, and we'll do that over there. So let's say the customer, another customer comes in and they want to purchase something, but we don't have it in stock. So you can add the customer if you want. You don't have to, but we're going to look them up, put them onto the invoice. Then we're going to sell them something. So this is let's say this is a special order. So this one tells me, hey, I don't have this in stock. I've got, not enough quantity to fulfill this. So we need to order this. So let's say if we want to order this, let's say he gets a couple other things too. So we're going to add that. And so then we're going to take a deposit on this because we have to order the product. So what I could do is just click add to PO, add to a new PO or an existing PO. If I add to a brand new one, it's going to pop up a purchase order for us. And based on where that primary part number is stocked, it's going to pull it. So in this case, I've got a repair that has a special order customer, and we know that it's for this specific RO. So let's save that. Let's place the order, and we'll get that ordered in. Take that, and we're going to take a deposit on this. So we're going to take $1,000, process it, and then we're going to add that to the sale. So then we're going to wait for that special order piece to come in. So let's say when the special order piece comes in, we're going to have to receive it into inventory. So we click receive POs. In this case, I'm going to choose the company. I think it was Napa. So let's see what we have open for Napa. We've got, oh, there it is. So here's the order. It's the widget. We're going to stock it in. We're just going to click receive items. We don't need to change pricing. Oh, it's telling us, hey, this is linked to this invoice. Okay, so let's go to that invoice. And we're going to tell QuickBooks how we paid for it. So we paid with a company credit card when we ordered it. Let's just close that. Let's go to the invoice. And so we know that's been received in now. And we we can see we got still a big negative quantity here, but we do have the one that we ordered for Rob. So we call him in, he would come in and pick it up, and we're gonna take the remaining payment. We'll do that as an Amex, and then we're gonna cash it out. But you can see how it captures all of the activity that's going on, and we know it interfaces with the service department, with the parts department. And then we have an invoice that we can print out. We got several flavors of this invoice that you can choose from. So for example, if I don't like the look of that, a lot of times people will print out a receipt, but we also have one called mail style, and you can print that out as well, so it'll fit in a window envelope. So let me go to Rob's customer record, just so you can see on the CRM side all the stuff we're tracking. And so as we're executing these transactions in EverLogic, we're recording history. So we can see we got part sales, service sales, vehicle sales. And so we're keeping a full history of everything that's going on with this customer. There's things you can do with the customer, such as obviously put in their address information, put in their zip code, 32256. It'll fill in, what city and state they're from, put in email. All this information can be captured. Social security numbers, we can save them, and they can be encrypted in the back end of our system. So there's a lot of things that you can turn on, hide, and stuff like that. So if I don't want to give my employees access to social security numbers, I can turn that off for them. But that's basically, in a nutshell, everything about operating EverLogic. The rest of the stuff is all about managing your business, and that will be coming through on reports. So for example, maybe I need to see my in-stock inventory, but I want to see it by days on lot. That could be a concern as a manager, to see that information. So I want to retail or get rid of stuff that is been aged on my lot. So we've got stuff that's in here 1,800 days, which is ridiculous. So you definitely want to get rid of that stuff. Yeah, that's kind of it in a nutshell. Now I'm going to show you how to post a transaction over to QuickBooks. So in EverLogic, we have this deal. We've completed the sale, and once you go through the profit accounting step, I'm going to show you that quickly. In the back profit, we're going to record that we made $4,900 in finance income. We sold a warranty contract, and it's going to cost us $2,500 to pay that to the agency. And of course, we're going to calculate out commissions. So we're going to wash the deal. When you wash the deal, what it does is it generates a report, and it will take this stock piece and mark it sold, and take the trade and bring it into inventory. So let me close out of here. I'm going to reopen the deal form. Just briefly, you can see that it now puts a washed watermark. But by doing that, what it does is it generates a transaction that you can post over to QuickBooks. So the next step would be to go into your office operations and then click on List Unposted Deals. Now in EverLogic, you have the opportunity to either use QuickBooks Online or desktop, and this message can be turned off if you're always using one or the other. So right now we're connecting into QuickBooks, and once it gets the connection established, then we'll be able to review the transaction and post it into QuickBooks. So you can see here I have one deal to post over. I just click the little plus sign, double click on the transaction. What it's going to do is it's going to basically generate an invoice that's going to record the income and the cost of goods for the transaction, as well as record, take things out of inventory and bring things into inventory. So for example, we're going to be taking the Class A inventory out of inventory, and then we're going to be taking the trade and bringing it in. Even though that's a negative value, it's actually going to be positive when it goes over to QuickBooks. We're going to collect sales taxes and things like that. So all you got to do is click Save, and it will send the transaction over into QuickBooks. And so it tells you that the invoice gets created in QuickBooks. And then when we go over to QuickBooks and we go into the account for that customer, Rob Lanza, let me refresh that. you'll see that it generates an invoice over here. So in his account, we now have a receivable for $172,000. So once you have the invoice over in QuickBooks, and when the bank sends you the check or wires you the funds, all you're going to do is receive the payment in QuickBooks on behalf of the customer. So we're just going to go in here, click on payment. It pulls up a receive payment dialog for you to fill in. Choose the method. So if it was, came in through a check or through ACH, you can put that in there. You can put a reference number. It's going to go into your undeposited funds. Put in the amount that the check was. It's going to apply it against that invoice, and then you're going to save and close. Now the customer will have a zero balance. So you can see that whole transaction goes through. All right, let me show you when you stock in a unit and how it goes over to QuickBooks. So that's basically a bill transaction. So let's go into here, into inventory. We'll just do a quick receiving of a new piece. So let's do a KS10863. Let's say we purchased it on the 1st of May, and let's say that our cost on that was $34,000 even. Let's floor plan this. We're going to choose a floor plan company, next gear, and I'm going to put in the amount that we floored it for, which was $34,000. So we're going to put in a beginning balance, starting balance as of 5/1 of $34,000. We'll add that balance. So by doing that, what it does is generates a transaction that can go over to QuickBooks. So let's go into the QuickBooks side in EverLogic, click on List Unposted Stock. And in the List Unposted Stock window, it's going to have that individual bill, what we call a bill, that can be sent over to QuickBooks. We're going to find the item we just stocked in, the KS1063. Basically, EverLogic automatically generates a bill transaction for you. So it's going to send it to your accounts payable floor plan account, puts in the vendor, what your terms are. If you have different terms, you can change those. They can automatically be changed. It creates a bill only by default, and that's what we recommend you do. And it's going to send it into your new travel trailer inventory account. So let's click Save. And it creates the bill in QuickBooks, and it's going to roll off the list of things to post. So let's go over to QuickBooks and see what happened. So we're going to go into our vendor center, and we're going to choose next gear, and we pull up their account, and you can see that there's several bills, but here's the one that it created. So let's go look at that bill. You can see in here that we owe next gear $34,000 for that RV. And here it is down here. We have it going into our new travel trailer inventory account. And that will sit in there and wait for us until we sell the RV, then we can pay off the bill. And so we've completed that transaction. Let me show you where that shows up in your balance sheet. So we're going to go to the reports menu. We're going to go to your balance sheet. Just do a summary. Go look at our travel trailer inventory account. That's last month. Let's go to this month and run that report. And if we look at our other current assets, we look at our new inventory, travel trailers. Here's the bill for next year in here. So you can see that it goes into the proper account. And then if we were to look at the liability side of the transaction, under accounts payable, be in the accounts payable floor plan. And here's the bill here. And we can reference that. So you can see how it affects QuickBooks. Okay, let me show you how EverLogic handles when you receive parts in. It's very similar to receiving in a stock piece. Let's go in here, let's receive an order from a company. Let's say it was NTP. Let's see what bills we have outstanding there. So let's say we had this order came in. We can pull up several at the same time. And if all these came in, we can create one bill for that. So we're gonna just say, hey, everything that was ordered was received across these multiple orders. We can receive the items in. We can tell QuickBooks how we're paying for it. So we're gonna say, hey, this is a bill pay. This one was a bill pay. This one is bill pay. And so we're basically gonna create bills for each one of these transactions. So then we're just gonna close the form and it will generate transactions for me to send to QuickBooks. Basically, you just go up to Office Operations, List Unposted POs, and we'll send one of the 4 over to QuickBooks and take a look at it over there. So here's one of them. We can just pull that up. It's going to go into our accounts payable, into NTP. We'll say it's due on receipt, and it's going to go into our inventory parts and accessories account. So click on Save. And it's going to generate a bill over in QuickBooks for NTP. So we'll go take a look at that. Just go to Vendors, and then we'll type in NTP Distribution. And then in here, we'll find that bill for the $2,001. So if you just pull it up, you can see that it goes into your inventory parts and accessories. And if you wanted to look at the balance sheet to see where the payable is and how it went into inventory, I'm going to show you that. So we're going to run a balance sheet transaction. We will do it for the period of this month, or recent will work. And then we would go down into our parts and accessories. So on the balance sheet, this will be the asset side of the transaction. And in here, you'd be able to go look through and find the bill. So here's the bill that was created yesterday or today. And here's the bill for $2,001. So that's going into our parts and accessories inventory. And then the other side of that transaction is going to be the payable side. So let's scroll down into other current liabilities. Look at the payables. We should have a bill in there for $2,001. Here it is. And there's the $2,001 that came in. So that's how bills go over into QuickBooks. Very easy to see. And basically you want this list to be pretty clean. A lot of dealers will leave bills sitting out here until they actually receive the bill from the vendor. Even though they've already received the items in, could have been several weeks ago. But once they get all the bills or a statement in, they come in there and start sending stuff across so they can pay that bill off in QuickBooks. Next, what I want to show you is an end-of-day transaction. So in EverLogic, we recommend that you run an end-of-day process each and every day, which basically accumulates all your parts and service transactions, any deposits that were taken in, whether they were for sales, service, or parts, and it will generate any on-account transactions. So we're going to start an end-of-day for today, and you're going to count up your cash drawer. So let's say you had an opening cash drawer value of $200, and then you're going to fill in how many pennies, nickels, dimes, etc. you had, and it's going to build how much cash you have. And so then you put in your cash line. We know it's $992, but you'd actually physically count the cash and you'd put in what cash you have here. You'd say how much you had in checks, how much you took in an Amex. So basically you're going to fill in all these values. Now you can click compare and it'll tell you if you're on or off. We're just going to leave it off. We're going to process this end of day. What EverLogic does, let's look at the printout of the end of day report, kind of show you a preview of what's going to go over to QuickBooks. But essentially the system is saying that we had Amex of 3710. We had some internal repairs that were done. We took some MasterCards, Visa. This information is going to go over to QuickBooks. We're going to use what the system says, not what the operator enters. But it is good for the operator to enter this stuff so that if there is any discrepancy, you can troubleshoot it. We have a summary page, and then on page 1, we're gonna show how many parts transactions. We had a couple parts transactions that were cash, no customer name. Then we had an internal and a retail transaction. And we're going to post all that information over to QuickBooks. We also had an on-account transaction for warranty. And so I'm going to show you how all that information flows over to QuickBooks. So once it's processed, it generates a transaction that's going to go into QuickBooks. All you need to do is click on List Unposted End of Days. It's going to connect with your QuickBooks file or QuickBooks company. We're using the QuickBooks Online version for this demo. And once it establishes a connection, we have one end of day that we have to post. So we just double click on that. It's going to build an invoice to go over to QuickBooks. So you can see here at the bottom, we have some Amex payments, MasterCard, Visa. So any payment methods are going to come in as negatives. And then of course, up here, you have your income and then your cost of goods. So it kind of looks a little counterintuitive that payments would actually show negative, but when they go to QuickBooks, they're actually going to go into your bank account. So let's click, you can look on view transactions. You can see, hey, we've got one warranty transaction going across, and then we'll just click save. So in this case, we actually have taken in a deposit from a customer over in QuickBooks. So that's going to be received. So you click receive payments. If the customer does not exist in QuickBooks, it's going to generate that customer over there for you. And it's going to save that payment into that customer's account. And then it's going to say, hey, did you, we're sending across the warranty. So it said, do you mean Keystone RV warranty? And we're going to say yes. So it's smart enough to try to figure out where it's supposed to post. And then it's going to tell you that the invoice was created over in QuickBooks. So let's go look at what happens over in QuickBooks. So first of all, let's go look at the end of day. So we're just going to click on the end of day customer over here. So here's the transaction that came in. Let's go look at the invoice, the detail. It's basically a mirror image of what we sent across from EverLogic. So you can see here that you have Amex, you know, Visas, MasterCards, and then your income, and then your cost of goods. It's going to organize it in whatever way QuickBooks does, but you can actually sort those if you need to. Let's go look at Keystone RV warranty. So we're just going to do a filter on the name here, Keystone RV warranty. And you can see that the invoice was created. So we're going to wait for Keystone RV to pay us. When that check comes in, we'll just apply it against that account. I'll just show you the transaction. So basically it had RO parts, sales, and we had labor. And so it records that. And then finally, let's go look at the deposit for our customer, Lawrence. So Trevor Lawrence, you can see, has a negative $500 balance, and you can see we did a receive payment transaction. So when the actual deal invoice comes across, it's going to auto apply that to Trevor's account, and that's going to take that as a payment against that. So that's really how everything flows over to QuickBooks from EverLogic. We have some other special features, curtailments and interests that you can send across. Let me show you how that kind of works. So we're going to use connect into QuickBooks once again. And if you remember earlier in the demo, I showed you how we generated some bills for NextGear, which is our floor plan company. Well, let's say you had to pay either curtailments or pay off that vendor because you sold the RV. So let's choose NextGear. Let's choose our accounts payable floor plan account. We'll search. What this is doing is saying, it's checking in EverLogic and saying, oh, do we have a bill that we sent over from EverLogic? Do we have a unit here? And then over in QuickBooks, do we have a corresponding bill? And when we sent the bill over, QuickBooks sends EverLogic back a transaction ID that we can use to reference that bill. So for example, that bill that we did on 4/30 for the Keystone, and it's due on 24, but let's say I had to pay that unit off. I can generate, like let's say we sold the unit, I can put $34,000 on there. This one, maybe I have to pay a curtailment of $1,000, and this one I don't have to do anything with. Down here, how you're gonna pay for it, you say what date of the payment, how you're gonna pay. We're gonna say check or credit card, we'll use check. Which bank account are we gonna pull it out of? And then you can put references in here, but we can say, hey, let's go ahead and create that over, make the payment in QuickBooks. And it's gonna create those bill payments for us over there. So if we were to look into that account, so you can see we still have that payment was paid off. Let's go look into NextGear's account. So we're going to the vendor center. Vendor, we'll look for NextGear. Let's filter that. And then you can see that we wrote a check for next year for that amount here on 5/17 to pay off that account. So that's how that all functions. Anyway, that's how EverLogic connects into QuickBooks. If you have any questions about how that works, please give us a call at 904-998-4066 and extension 2 for sales, and we will set up a demo with you individually so that you can actually see how EverLogic works with QuickBooks. Thank you very much.